Colony Capital, led by Thomas J. Barrick Jr., had agreed last week to provide an immediate cash infusion to the Weinstein Company. Christopher Goodney Bloomberg, via Getty Images. The Weinstein Company is looking for a new financial lifeline after a preliminary agreement for an immediate cash infusion from Colony Capital fell through. Last week, Colony, the private equity firm run by Thomas J. Barrick Jr., reached a preliminary agreement to provide much-needed cash to the studio, which has been thrown into turmoil by allegations of sexual harassment and rape against its co-founder Harvey Weinstein. Colony was also given a limited period to exclusively pursue the purchase of some or all of the Weinstein Company's assets. But those plans have changed. Colony has not and will not provide a cash infusion, according to two people briefed on the matter, who spoke on the condition of anonymity on Wednesday to discuss private deliberations. It was unclear why the preliminary agreement had fallen apart. Colony, which has experience in distressed Hollywood assets, continues to explore the purchase of some or all of the Weinstein Company's assets. But Colony found more disorder than it had expected, and less value, once it started closely examining the studio's assets, according to two people who were briefed on the matter. They added that Colony saw bankruptcy as the most likely near-term outcome for the studio. Representatives for Colony and the Weinstein Company declined to comment. The Weinstein Company still has options. Fortress Investment Group, a private equity firm that has lent money to beleaguered film companies in the past, has been working on a potential financing package for the studio valued at roughly $35 million, which would provide enough liquidity for the studio to operate roughly through January, according to three people briefed on the matter. On Monday, the New York Attorney General opened an inquiry into the studio, examining whether allegations against Mr. Weinstein reflect broad gender discrimination and other civil rights violations. On Tuesday, an aspiring actress, Dominique Hewitt, sued the Weinstein Company in Los Angeles Superior Court, accusing it of negligence. She became the first woman to take legal action against the studio since the New York Times and the New Yorker revealed decades of sexual harassment and rape allegations against Mr. Weinstein. In her complaint, Ms. Hewitt said Mr. Weinstein had lured her to a Beverly Hills hotel room in 2010 with the promise to discuss acting roles and instead forced her to engage in sex acts. A spokesman for the Weinstein Company did not respond to requests for comment on the suit on Wednesday. The suit contends that the Weinstein Company had a duty to control Weinstein in his interactions with women during meetings taking place within the course and scope of his employment. A spokeswoman for Mr. Weinstein, who was fired by the studio on October 8, has repeatedly denied any allegations of non-consensual sex. Part of Colony's calculus appears to involve the likelihood that other women will sue the studio. More than 50 women have come forward with allegations against Mr. Weinstein. In remarks to Bloomberg Television on Tuesday in Riyadh, Saudi Arabia, where Mr. Barrick was attending a business conference, he said that sorting through which potential liabilities are attributable to the company on an ongoing basis, and which aren't, is a Rubik's Cube, adding to the complexity. No one is interested in salvaging a company which would benefit Harvey, Mr. Barrick said. In other words, would it be possible to structure a sale so that Mr. Weinstein did not benefit financially? Mr. Weinstein owns roughly 20% of the studio. His brother, Bob, owns an identical share. The rest is owned by about 25 investors, who hold portions of varying sizes. Several major entertainment companies have looked at buying pieces of the Weinstein Company and come away with mixed to negative reactions, according to three people with knowledge of the matter. Lionsgate had interest in only one of the studio's coming films, Paddington 2, which is set for release in January. But even that family sequel has limited potential. The Weinstein Company mainly holds domestic rights. Endeavor, which owns the William Morris Endeavor talent agency and the IMG sports and fashion business, took a look at the Weinstein Company to see if there was a way to protect clients who have projects in the works there. But it concluded that clients should instead use legal tactics to pry projects loose. The Endeavor-related projects include a film adaptation of the musical In the Heights, created by Lin-Manuel Miranda and Chiara Allegria Hughes, a documentary about President Trump by Michael Moore, and a planned adaptation of The Boys in the Boat, Daniel James Brown's book about the American rowing team that won a gold medal at the 1936 Olympics in Berlin. Even before the sexual harassment crisis, the Weinstein's boutique studio was struggling. Film releases had become sporadic, and its library of old films had become less valuable because of the collapse of the DVD market and a 2010 deal to sell a substantial portion to prevent bankruptcy. The studio has made inroads in television, selling series to the likes of Amazon and Viacom and lining up potential shows with Showtime and Apple. But Amazon pulled the plug on its deal after the harassment scandal. Apple also walked away. Showtime said it would move forward with its project only if the Weinstein Company dropped out. Viacom's Paramount Network, formerly known as Spike, is moving forward with 3 series. In terms of existing shows, the Weinstein Company's primary asset is Project Runway, which airs on Lifetime. A scripted series, Scream, will return for a 6-episode third season on MTV in the spring. Michael J. Delamain and Kate Kelly contributed reporting. A version of this article appears in print on October 26, 2017, on page B2 of the New York edition with the headline "Beleaguered Weinstein Company will not get a planned cash infusion."